Welcome back to What's Hot and What's Not CRE, your daily pulse on commercial real estate in America. For what feels like an eternity, the big story has been the Sunbelt's oversupply problem. A flood of new construction met shifting demand, and suddenly, the darling of the pandemic era looked a little shaky. Today, we're diving into the regional picture for January 2026. The question on everyone's mind, is the tide finally turning? Let's break it down. All right, let's start with what's hot. And first up, the Texas Triangle is really showing signs of life. Dallas-Fort Worth is absolutely leading the Texas recovery. We saw a significant pickup in absorption in the last quarter of 2025, and for the first time in nearly 2 years, vacancy is starting to consistently tick down. Houston is also stabilizing, which is great news. The market there is benefiting from sustained strength in the energy sector, but more importantly, from a more disciplined approach to new supply. It seems developers there have learned from past cycles. Even San Antonio, which is often overlooked, is outperforming expectations with really solid job growth powering consistent demand. Next up, Florida's coastal markets remain incredibly resilient. Miami and Fort Lauderdale continue to defy gravity. It's a powerful combination: a steady flow of international capital, continued domestic migration from the Northeast, and very limited new supply in those prime, land-constrained coastal locations. Those factors are keeping occupancy tight and landlord leverage high. Tampa is a more mixed story, but it's definitely showing improvement as its own supply pipeline finally begins to thin out. The long-term fundamentals there are still very strong. Now for a market that's been a pleasant surprise. Nashville is turning the corner. You know, Nashville was one of the most oversupplied markets in the country back in 2024, but absorption over the past 6 months has been shockingly strong. The Music City's diverse job growth engine, driven by healthcare, tech, and major corporate relocations, is just absorbing new units faster than anyone projected. We're forecasting a return to modest rent growth by the middle of this year, which is a fantastic turnaround. And finally on our hot list, the Carolinas are stabilizing. Both Charlotte and Raleigh are still working through their excess inventory, but the data suggests the worst is now behind them. Both of these markets benefit from powerful long-term tailwinds, like strong in-migration and highly diverse employment bases. An interesting trend we're seeing is that Class B assets are outperforming Class A in these markets, as tenants seek more value-oriented space. It's a classic sign of a market beginning to heal from the bottom up. Okay, now for the other side of the coin. What's not? Topping this list, unfortunately, is Austin. The city remains the cautionary tale of the Sunbelt boom. Vacancy is still elevated above 10% in several key submarkets, and rent declines of 4 to 6% persisted through all of 2025. A recovery is happening, but it is slow and grinding. Don't get your hopes up for positive rent growth until late 2026 at the very earliest. The sheer volume of what was built there is just going to take time to digest. Next, Phoenix's oversupply continues to linger. This is another market that simply added too much supply too fast. The market is stabilizing, yes, but landlords are still offering very heavy concessions to attract and retain tenants. You're seeing multiple months of free rent and generous tenant improvement allowances, which tells you it's still a renter's market. A full recovery here is likely a 2027 story. Las Vegas is also lagging. Vegas got overbuilt during that pandemic migration boom. Demand has since normalized back to pre-pandemic levels, but the supply pipeline hasn't. The result is a simple imbalance that will continue to create softness in the market throughout 2026. It's not a disaster, but it's definitely underperforming its Sunbelt peers. And finally, let's talk about Atlanta's suburban glut. It's a tale of two cities in Atlanta right now. The urban core and the prime infill locations are performing just fine. But the suburban submarkets, particularly to the north and east, are drowning in new Class A supply. Concessions remain incredibly aggressive in these outlying areas as landlords compete for a limited pool of tenants. It will take a while to absorb all that space. So, that's your Sunbelt recovery update. The key takeaway here is nuance. The era of just buy anything in the Sunbelt is long over. The takeaway: Texas and Florida are leading the rebound. Nashville is surprising to the upside, but Austin and Phoenix still have work to do. Location within these metros and even the specific asset class matters more than ever. Thanks for tuning in to What's Hot and What's Not CRE. See you tomorrow. And don't forget to like, share, and subscribe for your daily CRE insights. Visit hotnotcre.com to learn more and subscribe to our newsletter.